JPMorgan's chief U.S. economist, Michael Feroli. Michael, our thanks to you. It's great to see you again. I know you've said recently that the data has had some hawkish implications, and you did raise your Q1 GDP forecast. Is there a sense that that batch of data is going to be softening in the coming months?
So I do think, January probably got supported by some one-off factors, including, bigger Social Security payments, better weather, perhaps some quirks with seasonal adjustments. So I wouldn't want to take all the January data and extrapolate that out in coming months. So I do think we probably soften a little bit here as we move into the spring. That said, I think what you saw in the jobless claims this morning is continued resilience in the labor market. And as long as the labor market is holding in like that, I think the economy will continue to expand. And that's why we've been marking up certainly current quarter growth. But we do think over time, the economy should slow, given the lagged effects of all these rate hikes, but we're not seeing that in a very clear and convincing way in the latest round of data.
Right. A lot of the forecasting charts we've been looking at, say on payroll, I mean, if you look at the year going out, the January print looks almost comical in retrospect, if in fact those forecasts come to fruition. Did the January number do anything to move the overall trend forecast for you?
So, I do think there is some some news in the January report. And so that is, I think of consequence. We added another rate hike for our view because of that. We do think, so it's not, we don't want to totally throw away a jobs report. That said, I do think it probably behooves one to smooth through these things and look at them on, say, a 3-month average basis to not get too carried away by just one month's number.
I guess the question that needs a smart economist like you to figure out is, can you really get a meaningful deceleration in inflation with the jobs market so hot? Hence another reading of below 200,000 jobless claims. Can that happen?
Yeah. So I guess I agree with most Fed officials that you do need to see some better balance in the labor market before you can become more comfortable with the forecast of inflation coming down. So to answer your question, we do think we need to see a softer labor market to really make sure that inflation is coming down in an enduring manner. And, as you say, we haven't seen that yet. I do think we want to give a little bit of credence here to the idea that monetary policy doesn't affect the economy overnight and that it takes time for decisions to be reset to this higher rate environment. That said, it does seem like we need perhaps even higher rates than we've already seen to get that sort of reset in the second half of the year.